All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy, what day is it? It's Tuesday. Happy Tuesday, everybody. Today's July 22nd, 2024. And the top story this morning, Jerome Powell is under fire from multiple different angles, and they're all Republican angles, and they're all for the wrong reasons. What happened? Yesterday, we had Secretary Scott Bessent was on TV. He was calling for a review, was the word he used, a review of the Fed's building renovations. Federal Reserve is in the process of a multi-billion-dollar renovation of their headquarters in Washington, D.C., and you know what? Why not? Why not spend billions of dollars? By the way, they're hundreds of millions of dollars over budget on nice upgrades to your digs. I mean, you guys have done a magnificent job of putting like 90% of the country in the poorhouse with the inflation that your money printing caused. Why not treat yourselves? I'm not going to defend what the Fed has done with their building renovation. Bessent was also calling for a review of their non-monetary policy operations. I'm sure they're talking about the Feds. I'm sure they've got a little independent working group on climate change and DEI and all these other things, all these things that have nothing to do with monetary policy. You want to look at that? You want to get rid of that crap? Sure, knock yourself out. No problem. I have no objection to the issues that Bessent is raising. By the way, Bessent was in the press this morning, kind of walking back those statements very carefully. A little bit of a singing a different tune this morning. But what are they doing? This isn't about the building. This isn't about the non-policy operations. This is about getting rid of Jerome Powell because he won't do what they want. The Federal Reserve is not doing what President Trump wants. President Trump lowers interest rates to juice the stock market. All right? There's a word for that. It's modern monetary theory. And it's stupid. That's actually 3 words, but I digress. There's no reason to do this. And by the way, the Supreme Court said you can't do this. You can't just arbitrarily fire the head of an independent regulator. Or actually, they said you can fire any independent regulator except the Federal Reserve. They specifically called them out, which means President Trump needs to fire Jerome Powell for a cause, and he needs Congress to get behind it. Well, enter GOP representative from the great state of Florida, Rep Luna, a.k.a. GOP AOC. She came in yesterday and actually took the unusual step of referring Jerome Powell to the DOJ for criminal prosecution. Yikes. Claiming that Chairman Powell lied to Congress on multiple occasions. Now, look, you want to go after Powell for the money printing? Knock yourself out. You want to go after Powell for the special purpose vehicles that were buying up corporate junk bonds, something that, by the way, is illegal, and he just did it and nobody said a thing? You want to go after him for that? Knock yourself out. You want to go after Powell for making the whole freaking housing market inaccessible for 99% of the population under the age of 40? Knock yourself out. You want to go after him for the exploding wealth gap? Knock yourself out. That's not what they're going after him for. They're going after him because they won't cut spending, they being Congress and the Republicans who are in power. They won't cut spending because they're a bunch of pansy little bleeps. Sorry, I don't want to get myself in all kinds of trouble. They don't want to do what needs to be done and cut spending, and so they'd rather the Fed just print it and lend it to them. That's what this is all about. No, I'm not a fan of the Federal Reserve. No, I don't think we should even have a Federal Reserve. But if they are successful in what they are trying to do, President Trump, Rep Luna, and Bessent, then they will install a puppet perma-dove in the Federal Reserve, and all of the problems that I just listed will get worse. And that's why I'm so angry about this. All right? This is not fiscal conservatism. This is modern monetary theory with a freaking elephant stamped on it. And it's crap. Also going on this morning, Project Stargate, the joint venture between OpenAI, Softbank, and Oracle. Yeah, they haven't even started that. They can't get it off the ground. They have not even formed the joint venture yet. They have not done anything. Whereas during the big policy announcement with President Trump, with all the guys in their facelifts, we're all standing in the Oval Office, and Sam Altman and Masa Son and Larry Ellison and President Trump, And they're like, yo, we're going to invest $100 billion right away and $500 billion over several years. And I was like, hey, none of these guys have $500 billion, but that's not important right now. The important thing is we're going to spend it. Yeah, right now they've gone from $100 billion right away to hopefully maybe one little data center started by the end of this year. What's worse, OpenAI has effectively cut SoftBank out of this deal. Everything that Project Stargate said they were going to do, they're kind of doing. They're just not using SoftBank to do it. I don't know if this has anything to do with OpenAI trying to become a for-profit company and failing. Now, you may recall OpenAI just raised $40 billion through SoftBank, or I should say they agreed to raise $40 billion. But that big $40 billion raise was contingent on OpenAI becoming a for-profit company, something they recently announced they are no longer going to do because Microsoft, OpenAI's biggest shareholder, said, I don't want you to do that. And so OpenAI may not even have the money to do this, but that hasn't stopped OpenAI from signing a $30 billion per year agreement with Oracle, along with all the other deals they've cut with CoreWeave and with Microsoft. Look, guys, if they don't get their for-profit transition done, that $40 billion cap raise becomes a $30 billion cap raise. None of these people have the money to do what they say they want to do. Nobody seems to care, but at the end of the day, you got to pay for stuff. Seems like kind of an important deal. Like, yo, we're going to spend $500 billion, but you don't have $500 billion. That's not important right now. That's a line that's dialogue right out of the Airplane movies. But hey, whatever, man. People buy the stock on this crap. So good luck. Project Stargate not even getting off the ground. Also going on this morning, we've got earnings from GM, Coca-Cola, D.R. Horton, and Lockheed Martin. A whole lot to get through in the earnings world. We got layoffs at Porsche. More layoffs at Porsche. Man, the auto industry is in bad shape here, guys. We had some pretty wicked volatility in Open Door yesterday. Somebody, probably a big hedge fund manager who's been pumping it on Reddit, sold a lot of shares in a couple of minutes, got that thing halted for volatility yesterday. But those shares are up double-digit percentages again this morning anyway. We have the UK's hideously expensive new Sizewell C nuclear plant. Wait till you see the price tag attached to this thing. The SharePoint hack appears to be even worse than they were saying yesterday. Microsoft has to deal with that. And an interesting warning from BlackRock involving employees traveling to China. What is going on with Americans traveling to China and getting stuck there? Seems to be happening a lot lately. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. By the way, don't forget that like button and that subscribe button if you're new here for the YouTube algorithm. And if you don't mind, come on back tomorrow and have your coffee with the Melonheads because we do this every day. Right now, the S&P 500 is higher by 6 points, 0.1%, just barely clinging to positive territory. The Dow, meanwhile, is down 3 points, 4 points now, 0.01%, going a whole bunch of nowhere for the Dow. And the NASDAQ is also unchanged for the morning. So not a lot happening in stocks here, despite a slew of earnings out this morning. The U.S. dollar, meanwhile, is modestly stronger at 97.90. That's higher by 5 basis points, but back below the 98% level. Looking over at the bond market, again, not much happening in bonds this morning. The 30-year Treasury, 4.940, up a fraction of 1 basis point. The 10-year is at 4.367. That is down 1 point and change. The 2-year at 3.844, down a fraction of 1 point. And the 1 month is at 4.297, down about a half a point. Whole lot of nothing happening in bonds. Looking over at commodities, however, whoa, what just happened in metals? They were in the red this morning, but now they are green. And I am totally okay with that. Spot gold, $3,412, back above $3,400 for spot gold. That's higher by $15.30 after having a heck of a day yesterday, about 0.5% higher this morning. And look at spot silver, my favorite of the shinies, up 24 cents at $39.17, 0.6% higher. And you may notice, guys, that front month silver contract for September at $39.63, that is up by almost 30 cents. So we're watching that exchange for physical premium blow out here. People are paying more money for silver next month in New York, then they're paying for it right now in London. That should mean that metal will start flowing back into the States. I don't know if this is tariff related or maybe it's related to all the modern monetary nonsense going on at the Fed. Either way, I like the shiny. Copper higher by 1.3% this morning. Platinum is down 1%, but still well above $1,400. We actually ticked above $1,500 for October platinum futures this morning. Palladium is higher by 0.4%, and crude oil is down about 1%, $65.28 for September WTI futures. Looking over at Bitcoin this morning, Bitcoin is doing pretty okay here, up about $2,000 from yesterday, $119,397 for Bitcoin. Still in this little bull flag pattern that we've been putting in for a couple of weeks here, threatening to break out this morning, however. All right, let's talk about the main story, though. Probably contributing to some of why gold and silver and Bitcoin are rallying this morning. Bessent says review of Fed's building renovations is needed. Treasury Secretary Scott Bessent said in a social media post Monday that there should be a review of the decision to renovate parts of the Federal Reserve headquarters in Washington. While I have no knowledge or opinion on the legal basis for the massive building renovations being undertaken on Constitution Avenue, a review of the decision to undertake such a project by an institution reporting operating losses of more than $100 billion per year should be conducted, Bessent said in a post on X, formerly known as Twitter. And, if that review results in the firing of the head of that institution and then some puppet that I control gets put in place, allowing me to physically dominate the Federal Reserve and get them to print all the money I need to borrow at low interest, well, then that's just a coincidence. Let's just make sure the renovation isn't a problem. Bessent also said the Fed should conduct an exhaustive internal review of its non-monetary policy operations, adding that significant mission creep and institutional growth have taken the Fed into areas that potentially jeopardize the independence of its core monetary policy mission. Yes, we certainly wouldn't want to jeopardize that Fed independence, Scott. I can see why you might be worried about that. And then things just went from bad to worse with this. Fed Chair Jerome Powell referred to DOJ for criminal charges. Okay, are we doing that? Are we doing this whole like we prosecute the people we don't like thing? I seem to remember a few years ago we sang a different tune about that. Remember, we were all opposed to political prosecutions not too long ago. But I digress. This, by the way, guys, this isn't going to happen. This is a circus act. It's just the fact that they're saying this is really crazy. Federal Reserve Chair Jerome Powell has been hit with a referral to the Department of Justice on 2 instances of criminal charges. U.S. Congresswoman for Florida, Anna Paulina Luna, is accusing Powell of perjury on 2 occasions, according to a letter to the DOJ obtained by Fox News. On June 25th, 2025, Chairman Powell provided testimony under oath before the U.S. Senate Committee on Banking, Housing, and Urban Affairs regarding the renovation of the Fed's Eccles building. In his statements, he made several materially false claims. Luna's letter reads, the Florida Republican also accused Powell of lying about lavish amenities at the Fed's Eccles building and misrepresenting its state of maintenance. Separately, in a letter to the Office of Management and Budget Director Russell Vaught, Chairman Powell characterized the changes that escalated the cost of the project from $1.9 billion to $2.6 billion as minor. However, documents reviewed by congressional investigators indicate that the scope of the cost overruns this project were neither minor in nature nor in substance. Okay, so you know what? He said something was minor, and it's in fact not minor, and therefore we should turn over control of the United States money printer to some sycophant who's going to just manufacture trillions of dollars out of thin air and make life unaffordable for everybody because Powell said minor. No, not because transitory, not because special purpose vehicles, not because the unaffordable cost of living. No, none of that. No, he said minor. That's the problem with Jerome Powell, right? Guys, they're going to make it worse. That's why I'm so upset about this. It's not that they're finally, they're trying to tap into this end the Fed energy, and normally I can get behind that, but they're going to end the Fed as it currently stands and then mutate it into something infinitely worse. That's the problem. And that's why I hope the GOP's version of AOC is not successful in getting the DOJ to criminally prosecute Jerome Powell, which they probably won't do. I think this is a circus act, but it's just stupid. Let's just put it that way. Meanwhile, this one in the Wall Street Journal yesterday kind of surprised a lot of people. Softbank and OpenAI's $500 billion AI project struggles to get off the ground. And when I say this surprised a lot of people, it did not surprise me because Softbank and OpenAI do not have $500 billion. I can't help but keep repeating that, right? If you say you're going to spend all this money, isn't the first question out of the next guy's mouth supposed to be, well, do you have it? And if the answer is no, then you ain't going to spend it. That's how math works. The Stargate venture introduced at the White House event is now setting the more modest goal of building a small data center by year end. So much for $100 billion right away. The $500 billion effort unveiled at the White House to supercharge the U.S.'s artificial intelligence ambitions has struggled to get off the ground and has sharply scaled back its near-term plans. 6 months after Japanese billionaire Masa-son stood shoulder to shoulder with Sam Altman and President Trump, I should say he stood shoulder to hip with President Trump because Masa-son is a short man and President Trump is rather large. But I digress. The newly formed company charged with making it happen has yet to complete a single deal for a data center. Masa-son's Softbank and Altman's OpenAI, which jointly led Stargate, have been at odds over crucial terms of the partnership, including where to build the sites, according to people familiar with the matter. While the companies pledged at the January announcement to invest $100 billion immediately, the project is now setting the more modest goal of building a small data center by the end of this year, likely in Ohio. Stargate's lethargic launch is a setback for the vast ambitions of Sun, who, despite spending billions of dollars over the years, has been playing catch-up in the fast-evolving AI sector. SoftBank committed $30 billion to OpenAI earlier this year. It's by far the largest ever startup investment, an enormous wager that has led SoftBank to take on new debt and sell assets. The investment was made alongside the plans for Stargate, giving SoftBank a role in the physical infrastructure needed for AI. Altman, eager to secure the computing power to support the next generations of his company's signature product, ChatGPT, has plowed ahead without SoftBank, signing deals for data centers with other operators. The leaders of both companies say all is well in their joint venture. Last week, they appeared in a video at a SoftBank event, and Altman said they have an initial goal of building 10 gigawatts of data centers together. It's a wonderful partnership. Stargate's rocky start hasn't slowed the data center development spree that Trump had said is a national priority. AI enthusiasts say the world will require a gargantuan effort to build the warehouse-like structures filled with computer servers and the electricity needed to supply them, on par with construction of railroads in the 19th century. Altman's OpenAI recently struck a data center deal with Oracle that calls for OpenAI to pay more than $30 billion a year to the software and cloud computing company, starting within 3 years, according to people familiar with the transaction. $30 billion annually, every freaking year. They don't have $30 billion. They don't have 1 year's worth of this money, but I digress. That deal, which doesn't involve SoftBank, totals 4.5 gigawatts of capacity and would consume the equivalent power of more than 2 Hoover dams, enough to power 4 million homes. The data centers are spread among locations around the U.S., people familiar with the matter said. See what they're doing here? Altman struck this deal with Oracle. They basically took SoftBank's money and they cut SoftBank out of the deal. That's not such a good look. Training new, better AI models requires ever more data processing, which means companies, including OpenAI, are committing to larger and larger spending well before the business models of AI companies have proved profitable. OpenAI's $30 billion a year deal with Oracle is roughly 3 times as much as what Altman's company has recently projected in annual revenue. The company, which is losing billions of dollars a year, is betting its revenue will multiply thanks to the growing ranks of paying customers and advertising, allowing it to pay for its hefty commitments. And that last paragraph is just amazing. All right, they committed to spending $30 billion a year on these Oracle data centers. That number is 3 times their revenue. Forget the fact that OpenAI lost $6 billion last year. They have committed to spending 3 times their annual revenue every year with Oracle, and that doesn't include what they're spending at CoreWeave and what they're spending at Microsoft. Okay. All right. You know what? Congratulations for spouting off the biggest random numbers this week, Sam Altman and Larry Ellison. Let's not let math get in the way. Let's not let physics get in the way. Just keep spouting off random numbers, and people will keep loaning you money. People will keep buying your stocks. Sooner or later, reality catches up with this bubble. This article just has some of the most ridiculous crap I've read in so long. But you know what? They had their photo op with the president, and idiots bought their stock because of it. So good luck with that. Joke's on me, I guess. Meanwhile, let's talk a little bit about some earnings we got today. GM profit falls as Trump tariffs add $1.1 billion in costs. The tariffs were supposed to help U.S. companies, but when U.S. companies get all their parts overseas, the tariffs don't really help them, it turns out. General Motors' second quarter profit fell as President Trump's tariffs chopped $1.1 billion from adjusted earnings. The Detroit-based automaker said Tuesday it earned $2.53 per share on an adjusted basis, above Bloomberg's estimates for $2.33, but short of the $3.06 it made a year ago. GM's profits also suffered from higher warranty costs and a buildup in inventory of electric vehicles. Net income declined 35% to $1.9 billion, compared with $2.9 billion in the second quarter of last year. GM's results showcase the difficulty automakers face to maintain profits in an environment that newly penalizes globally integrated parts supply chains and cross-border vehicle sales. CEO Mary Barra hinted at the challenge in a letter to shareholders describing the car maker's efforts to adjust to the new reality. We are positioning the business for a profitable long-term future as we adapt to new trade and tax policies and a rapidly evolving tech landscape, Barra said, noting an announcement in June to shift some production to the U.S. from Mexico. And GM shares not looking so hot this morning, down ahead of the opening bell by 2%, $52.15. That's off by $1.10, but they were down more than that earlier, so clawing back a little bit of those losses. Some more problems in the auto industry, this time across the pond in Germany. Porsche CEO seeks fresh cost cuts, warning business model no longer works in a post-Trump new China world. Things just keep getting better in autos. Once the envy of the entire German auto industry, Porsche is drifting deeper and deeper into its biggest crisis in decades. In a letter to employees, the manufacturer of the iconic 911 sports car informed its 36,700 domestic workforce that it would enter negotiations with the IG Metall trade union over a second package of cost cuts designed to protect profit margins. And by the way, a second package of cost cuts, that is corporate speak for we are firing people. The latest reductions are expected to come on top of the already 3,900 job cuts planned in Germany through 2029, designed to shrink the company's cost base to reflect a world where the brand sells only 250,000 cars annually instead of the 311,000 cars achieved last year. CEO Oliver Bloom, who splits his time running both Porsche and its majority owner Volkswagen, warned staff that they would have to gird themselves for difficult times to come. Our business model that sustained us over many decades no longer is functioning today in its current form. Business conditions have deteriorated massively within a short period of time, Bloom warned his employees in comments obtained by Fortune. More trouble in the car space, more layoffs in Europe. The 1-2 punch of Trump's trade war and tariffs, along with cheap China EVs, and of course, the shrinking cost of affordability. Porsche is not doing so well in that environment. We also got earnings from Coca-Cola this morning. They beat estimates as strong demand in Europe helps offset weakness elsewhere. Hiding in this data was some pretty bad statistics. Coca-Cola on Tuesday reported quarterly earnings and revenue that topped expectations as strong demand in Europe offset weaker volumes in other markets. Shares of the company fell less than 1% in pre-market trading. Coke reported second quarter net income attributable to shareholders of $3.81 billion or 88 cents a share. That's up from $2.41 billion or 56 cents a share earlier. So a big jump in earnings. Now, excluding asset impairments and restructuring charges and other items, the beverage giant earned 87 cents a share. Net sales rose 1% to $12.54 billion, excluding items. Company revenue reached $12.62 billion. So we got a 1% jump in net sales. The company's organic revenue, which strips out acquisitions, divestitures, and foreign currency, increased 5%. All right, so far, all these numbers look great. But Coke's global unit case volume fell 1% in the quarter. Every division but Coke's Europe, Middle East, and Africa business reported shrinking volume. The metric strips out the impact of pricing and foreign currency to reflect demand. So all of this earnings beat, the net sales increase, the increase in earnings per share, it was price hikes, price increases. In other words, it was inflation for cans of Coke, and consumers aren't paying it. And so Coke is selling fewer cases everywhere but the Middle East, Africa, and Europe. Coke executives have previously said that economic uncertainty and geopolitical tensions have weighed on consumer confidence, hurting its sales in some markets. In North America, volume fell 1% as demand for the company's namesake soda declined. Latin American unit case volume decreased 2%, while Coke's Asia-Pacific market saw the metric drop 3% in the quarter. The company's Europe, Middle East, and Africa segment saw volume growth of 3%. So fewer cases of Coke are selling, offset by price hikes. Coca-Cola shares are down 1.48% ahead of the opening bell, trading at $69.21. Although year-to-date, Coke is up about 12.5%. It's had a pretty good year. Home buying incentives to increase in the coming months. D.R. Horton says more trouble for home builders. Look at some of the data we've gotten here. Shares of D.R. Horton rallied early Tuesday, trading after the home builders' fiscal third quarter report beat expectations on several metrics, even though the market for new homes remains subdued. The company said it would increase efforts to boost demand in the coming months, including price cuts. I know some housing bulls that are not going to want to hear that. Sales orders for new homes inched up 0.3% from a year ago after falling the previous 2 quarters to 23,071 units, which topped the average estimate compiled by FactSet for 22,114 units. All right, so they sold a few more houses. Meanwhile, the value of new orders fell by 3% to $8.4 billion. That's above the consensus of $8.22 billion, but that implied the average price of new orders fell to about $364,100 per home. That's down from roughly $376,500 per home. So we're seeing price cuts in new homes now. Total revenue declined 7.4% to $9.23 billion. Again, beating estimates as home closed during the quarter fell 4.1%. So we got fewer closures. Net income dropped 24.3% to $1.02 billion, while earnings per share of $3.36 were well above the estimate of $2.89. For 2025, the company revised its guidance range for revenue of $33.7 to $34.2 billion. That's from $33.3 to $34.8. That effectively lowers the midpoint of their guidance to $33.95 from $34.05. So a stealth guidance cut there. The outlook for home deliveries was also nudged lower to 85 to 85,500, down from 85,000 to 87,000. So within this number, within all of these earnings beats and increases in earnings per share, you got homes. They sold a few more homes, but they sold for a lot less money, and a big drop in D.R. Horton's earnings. But apparently the market was pricing in worse news than that, because D.R. Horton stock, the opening bell just rang, is up 10%, now 9%, $142.93. Meanwhile, Lockheed misses earnings estimates due to special charges. This one kind of came out of nowhere. I think some people were expecting this, but they were expecting a much smaller number. Lockheed Martin's second quarter earnings fell well short of expectations on a bevy of one-time charges. Investors were ready for some extra expenses, but the magnitude recorded in the quarter still surprised some. Included in the second quarter earnings per share number were charges amounting to $1.7 billion, or $5.83 per share after tax. Charges for classified programs in the company's aeronautics segment totaled $950 million. 2 charges for helicopter programs totaled $665 million. Write-offs for the Air Force 6th-generation fighter jet that went to Boeing amounted to $66 million. All that taken together means Lockheed reported earnings per share of just $1.46 when the market was expecting EPS of $6.41. A huge miss for Lockheed Martin, and the stock is paying the price this morning, or at least it was pre-market, down 8.1% now, $423.68 for Lockheed Martin. Although year-to-date, Lockheed Martin is now down 12.8%. Look, if you can't sell weapons in this environment, you got bigger problems, because stuff is going boom all over the freaking world. Meanwhile, we got Open Door sees an epic afternoon wipeout during wild roller coaster day. We're getting a little short on time here, guys, so I'll go pretty quick. Open Door stock was up over 100% at one point, and then it sold off by like 50% in a matter of 5 minutes. It got halted for volatility, and then it came right back. Somebody with a lot of shares sold a lot of shares in a very short window yesterday, crashing the price. Gee, I'm shocked. I'm shocked that somebody with very deep pockets is taking advantage of all this meme stock mania in order to cash out using Reddit traders as exit liquidity. This is my surprise face. Can you see it? Really, the shock is genuine. However, Open Door Technologies rallying again today. Let's see, or at least it was rallying pre-market up another 21.1% this morning. So look at a 5-day chart here. Here's that big sell-off. Now, we're still up versus a day ago, so this stock is still squeezing. But somebody ran this thing up and then dumped on retail yesterday. It was enough to get the stock halted, but it was not enough to stop this buying frenzy. They are piling in once again this morning, higher by about another 18%. Meanwhile, the UK government has approved a $51 billion Sizewell C nuclear plant. This is obscenely expensive. Obscenely expensive. The UK government approved the £38 billion, $51.27 billion Sizewell C nuclear plant in southeast England, becoming the project's biggest shareholder. Guys, the Sizewell C nuclear plant, they're building 2 EPRs. That's the giant French reactor. It's like a 1,600 megawatt reactor. It's like 1.5 times the size of even the big nuclear plants here in the United States. So these things are huge. Don't get me wrong. They make a lot of power. But $51.25 billion for 2 reactors, almost $26 billion per reactor. This thing, expensive, doesn't even begin to cover it. We paid about $15 billion per reactor for those power plants in Georgia, the Vogtle reactors. Now, those are 1,100 megawatt reactors at $15 billion apiece, and that was enough to bankrupt Westinghouse. I don't know what you call this. The government said Tuesday that it will take an initial 44.9% stake in the 3.2 gigawatt nuclear power station under construction in Suffolk. The other investors include the pension fund La Caisse. That's the Ontario, Canada pension fund, and they get French reactors built by a French company, and then all the French Canadians are putting their retirement money into it. That's kind of convenient. La Caisse is taking a 20% stake. The UK's Centrica will take a 15% stake. French energy giant EDF, a 12.5% stake. And Amber Infrastructure with an initial 7.6% stake. Look, I'm glad to see more nuclear power plants get built. That's good. But I can't get past this. $51 billion for 2 EPRs. This is dead money here. We need to be building SMRs. Let's just put it this way. Small modular reactors is the way to go. $26 billion per reactor. No, wait, you're just never going to make back that money, not even over a 40, 60, or even 80-year lifespan of a power plant. That's just way too much cash up front. Meanwhile, Microsoft rushes to stop hackers from wreaking global havoc. Guys, we're going to have to cut these short because I'm getting kind of long here. I don't want to run the show 45 minutes. But this was really, really bad. I suspected this was going to be pretty bad when the story first broke yesterday. Let me just read a little bit about it here. The hackers also breached the systems. No, that's not even good enough here. Hold on. Hackers have already used the flaw to break into systems of national governments in Europe and the Middle East, according to a person familiar with the matter. In the U.S., they've accessed government systems, including ones belonging to the U.S. Department of Education, Florida's Department of Revenue, Rhode Island General Assembly. Al Midnight, that's my feet, said the person who spoke on condition that they are not identified discussing this sensitive information. Sorry, guys. My cat just came in here and started attacking my feet while I'm talking. But we must press on. This is a live show and there's no retakes. The hackers also breached the systems of a U.S.-based healthcare provider and targeted a public university in Southeast Asia, according to a report from cybersecurity firm reviewed by Bloomberg News. The report doesn't identify either entity by name, but says the hackers have attempted to breach SharePoint servers in countries including Brazil, Canada, Indonesia, Spain, South Africa, Switzerland, the UK, and the US. In other words, everywhere. The firm asked not to be named because of sensitivity. Nobody gets named. In some systems they've broken into, the hackers have stolen sign-in credentials, including usernames, passwords, hash codes, and tokens, according to a person familiar with the matter. I bet he didn't want to be named on condition of anonymity as well. This is a high-severity, high-urgency threat, said Michael Sikorsky, who did get named. No conditions of anonymity. Shout out to Michael Sikorsky, Chief Technology Officer and Head of Threat Intelligence for Unit 42 at Palo Alto, the one guy who was willing to put his name on the line today. What makes this especially concerning is SharePoint's deep integration with Microsoft platform, including their services like Office, Teams, OneDrive, and Outlook, which has all the information valuable to an attacker, he said. A compromise doesn't stay contained. It opens the door to the entire network. Tens of thousands, if not hundreds of thousands of businesses and institutions worldwide use SharePoint in some fashion to store and collaborate on documents. Microsoft said the attackers are specifically targeting clients running SharePoint servers from their own on-premises networks, as opposed to those being hosted by and managed by the tech firm. That could limit the impact to a subsection of customers, although they just named like a dozen countries and possibly tens of thousands of companies. So Microsoft trying to downplay that a little bit. This seems like we're probably going to hear a lot more about this hack in the days ahead. And the last one, BlackRock restricts use of company devices for China travel. I'm not going to get too much into this one, guys, because we're running kind of late. All I can tell you is there's been several stories recently. There was that story about the banker from Wells Fargo, the one who's involved in the factoring and trade business, who was not allowed to leave after visiting family in China. There's also a story recently about an employee at the Commerce Department who was traveling to China. They were not allowed to leave for failing to disclose they worked for the U.S. government. And now we've got BlackRock telling people, if you got to go to China, you leave your phone at home and you leave your computer at home. Bring a burner with you. I don't know what's going on here, but can you see this like slow walking into war? Like, I don't know if this is corporate espionage, government espionage, both, or just the Chinese being a-holes. Whatever it is, guys, I don't know. Maybe it's time to rethink a trip to China. I'm just throwing that one out there. They're not exactly the freedom-loving people they're portrayed to be by Hollywood, who just desperately wants their movies to be available in Chinese markets. And so they say whatever Communist Party censors tell them to say. All, of course, while posturing and virtue signaling about whatever issue might be in vogue in the United States at any given time. Anyways, just watch out for that one, guys. I just want to say thank you very much to KDM. What's going on, KDM? He says, Doge didn't cut the Fed building renovation, so it must be a good value. Yes, certainly no waste, fraud, or abuse happening there. Look, guys, Doge didn't cut much of anything. Doge cut PBS, NPR, and foreign aid. $9 billion, enough to fund the government for about 11 hours. That is what Doge cut. I think Elon Musk lost more value in market cap in his companies because of what he did with Doge than he actually cut in government spending. It's quite a story, isn't it? Wonderful little allegory there, government spending cuts. But no, go ahead, just fire Jerome Powell and put a dove in charge and then go hunt waste, fraud, and abuse. Yeah, okay. Thank you, KDM, for supporting the channel, sir. Madison Hype says, what is Mr. Slammy and how does it affect the shiny? Mr. Slammy is the personification of short interest in the silver futures. All right. We all talk about Mr. Slammy. We've all seen it. One morning we all wake up, silver prices are looking good, and then the market opens and we see a boom, a $1 price slam. And it's going to come down. It's going to happen at some point. We're going to see these $1 drops. We've seen them before. I expect this time will be no different. It's just a euphemism for a large, sudden wave of selling in the silver markets. Many people say it's the banking cabal and that they're conspiring to suppress silver prices. If that's what they're doing a lousy freaking job of it right now. But that's Mr. Slammy. Look, guys, right now there's what's the word? A structural mismatch in positioning in markets. Silver is on the cusp of a short squeeze. I don't know what it's doing at this exact moment. Are we actually going to see a paper short squeeze or not? Just know that the physical silver market and the paper silver market are two totally wildly different animals, and they don't always move in tandem with one another. You've got supply and demand for small denomination bullion products, largely impacts the price for physical silver products. That doesn't really, it's not a factor at all in the futures market. So just be careful. Mr. Slammy could rear his ugly head at any given time. Thank you, Madison, for supporting the channel. Robert Feeds the Machine says the aristocracy is cracking up. They are loving it. I tell you, while everybody's in the press like talking about, oh, Fed independence, and we're probably going to see at the next FOMC meeting, Steve Leisman and all the hot millennial girls from all the different financial outlets are all going to ask Chair Powell questions about, oh, what about Fed independence and this and that? Secretly, their bosses are licking their chops, loving life. Because if Trump does actually fire Powell and put a dove in charge, guess what they're going to do? They're going to print and they're going to lower rates. And that's going to make them hideously wealthy. And all the people who advertise on their channels, hideously wealthy. So they're going to feign outrage. They're going to be like, oh my God, my Fed independence in the country. And oh my God, while secretly celebrating just how freaking rich it's going to make them. So just keep that in mind. Thank you, Robert Feeds the Machine. I agree. The aristocracy is cracking up, laughing all the way to the bank. Charles G says, cut spending and end the Fed. Don't threaten me with a good time, Chuck. I'd rather Powell be there and stop more spending. Also, maybe the 10-year will fall if Trump actually cuts spending. What a concept. Less issuance. If you want the price of something to go down, or hey, I don't know. You want the price to go down? Maybe don't mix, or what do I know? Then he would have his lower rates. Look, guys, lower rates, the long end it's not going to happen. We're not going to get lower rates. The only way you get lower rates is if you get a sudden surge of buying, bidding up prices, or a sudden reduction in issuance, as Charles is alluding to here. That's not going to happen. They're not actually going to cut spending. They're going to increase it. And I tell you, the one thing, my buddy Joe Brown over at Heresy Financial made a really good point about this, and I've mentioned it a few times. The Fed lowering rates doesn't mean interest rates go lower. The Fed only controls that overnight rate. They don't control the 10-year, the 20-year, and the 30-year. That's more influenced by inflation expectations, really, than anything else. And if the Fed starts lowering in an environment where the money supply is already growing and assets are already at all-time highs, then long-term inflation expectations are going to rise, and it's going to take interest rates with it. So Fed rate cuts will probably be counterproductive in the long run. Thank you, Charles G. That's a good point, sir. Pigo's Trading Desk says Midnight wants Stargate yelling. So let's see. I got to tie in the cat. I got to tie in Project Stargate. And, of course, I got to get my girl, Janet. Well, Midnight, the cat who's attacking my feet right now with his razor-sharp claws and spiky teeth. Ow, that really hurts. But I'll be honest with you, I haven't really had much feeling in my feet for several years because my ankles are all swollen and I don't really get out and exercise much. I just sit in my chair and collect my fees for services rendered during my time at the Federal Reserve and the Treasury Department. Like the people in Chuck's comment talking about the elites laughing all the way to the bank, I do the same thing. Thank you for your attention to this matter. Okay, well, you want my cat? You want Stargate? Oh, I forgot Stargate. Son of a gun. Masa's son, break a character here. Masa's son does not have $500 billion. But since when does that stop anybody? I didn't have $32 trillion, and I still ran that debt up, didn't I? So maybe it doesn't matter how much money anybody has. Just go out and spend it and make it somebody else's problem. As always, Secretary Yellen, thank you so much for the unusual, out-of-character display of candor that you always have on this channel and nowhere else. You only get that one here. For whatever reason, she really opens up, blossoms like a flower on this channel. Thank you, Pigo, for supporting the channel, and thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate it. Hey, don't forget that like button and that subscribe button on the way out for the algorithm, should you feel so inclined. And also, should you feel so inclined, I got links down below to all that good stuff, like the Patreon page and everything else. Oh, Tom Dillon, after the son of a gun, Tom, you messed up my whole sign-off. Cut the music. We got to get Tom here. Andy Schechtman and Rick Rule have said the futures market has faltered in its ability to squash the silver price. Right now, I'll be honest with you, maybe something you're not hearing. One of the people squeezing silver right now, one of the shorts getting squeezed out, is probably Andy Schechtman and Rick Rule. They're probably the guys that are being forced to cover their shorts. Because remember, they're dealers. They have a huge position in gold and silver, and they maintain neutrality by hedging in the futures market. So, who's losing their ability to squash silver prices? I don't know who's losing their ability to squash silver prices. All I know is the people that are covering their shorts right now, it's Andy Schechtman and Rick Rule and other guys like that. It's the dealers that are getting squeezed here, as well as the miners and, the banks too, Bank of America and them. Thank you, Tom Dillon, for supporting the channel. And once again, everybody, all that other stuff to sign off to thank you so much. Links, all that stuff down there. Stop it, Steve Boy. This chainmail socks for Christmas. Yeah, midnight will still bite right through those things. All right, guys. Hi, Mom. Hi, Dad. I love you. Everybody else, till next time, live small and dream big.